I'm Darius from Chelsea Financial Services.
I'm here today with Mike Sell, Fund Manager of the Alquity Asian Fund and the Alquity India Fund. Mike, Alquity is a slightly different type of investment management firm. Could you just tell us a little bit more about what Alquity does that's different apart from just the pure investment side?
Sure. Alquity has been going for 6 years now, and we're based in London, and we run 5 funds, all focused on emerging and frontier markets. Our investment process is different from many people's in that we do traditional financial analysis on a forward-looking basis, but also we look at material non-financial factors such as the environmental and social impact of companies, the governance of companies, and that gives us a much greater insight, we believe, into what's really going on under the bonnet. And then divorced from that, but also incredibly important, is we donate at least 10% of our revenue, so it comes out of our pockets, not that of investors, to empowerment such as microfinance projects in the areas that we invest in. And over the last 6 years, we've generated over £630,000 of donations for these areas and transformed over 34,000 lives. So it's, again, something that is very, very important to what we do at Alquity.
Yeah, generally investing with a bit of a difference.
Absolutely, absolutely.
Yeah. So if we get to sort of the main area, we here have been a bit worried about China. As we know, at the start of 2016, some bad data out of China led to very volatile markets for sort of 8-10 weeks. What's your view on the region and China's part in it?
Sure, I'll start with China then. Our view is perhaps a bit more sanguine than yours, whereas we expect GDP growth to be broadly stable at around the 6.5%. Now that is coming largely from an increased fiscal stimulus. The Chinese, with actually quite low levels of urbanisation, still need to spend money on infrastructure and housing and so forth. And that's where the growth is coming from, and that's very much where we're focused. So we think China is going to be just fine. It's neither too hot, too cold, it will do very well. We obviously, in the world we're now in, have to be cautious of what Mr. Trump may or may not do, and we have to watch out for signs of a trade war or anything along those lines, and time will tell. But the way we look at China, and indeed Asia more generally, is we focus on structural growth stories. Companies that will benefit from the demographic profile we see, from rising levels of urbanisation. So we don't own exporters, we don't own manufacturing. We own companies that are focused on domestic banking, on air conditioning, on housing, cement. This is where we see the most attractive growth opportunities for the next 3 to 5 years. And I must just mention India, which is perhaps one of the best investment stories in Asia, where you have amazing demographics, a fast-growing economy, and structural reform undertaken by Mr. Modi. And we've been adding to India throughout the last year, and we really do believe it's a once-in-a-generation opportunity to invest there. And the final part of what makes us different, and I think being different is incredibly important, is our focus on frontier markets, whether it's Vietnam, Pakistan, Bangladesh. These countries have huge young populations, incredibly uncorrelated to other global growth markets, and provide the very strong, low volatility, uncorrelated returns that we're looking for.
Mike, thank you very much.
Thank you.